This is the CEO of Weisenbach Investments, and I'm going to do a market review. This is the other computer I have, and I have to use it because I have some programs that don't work on my Mac, like XTT Trader. And that's fine, and you know, I don't need these domes. I'll just get rid of them. So let's just look at the chart here. So first, I want to look at the ES, and we'll let load. Load. Okay, it loaded. Okay, so the ES has been down on a minutely chart, but it was 60 minutes. Okay, here we go. So I am officially short the ES, right? And I'm still short the ES, and I don't plan to get out of it for, let's think, several months. Yeah. So we have this upwards channel, and it broke the channel, which is a good thing, and that's a perfect shorting. Oops, sorry. This is a perfect shorting opportunity. So, you know, I went ahead and took a short, did pretty well on it. This little movement to the upside, it worried me a little bit, but what I thought it was just a ABC correction, and I was right. Cracked down to the downside, and I'm still short. The only thing that might worry me is the market's established a little bit of a support level, and I just say the market sees value, you know. So what did we have today? I believe we had unemployment numbers increased. Yeah, that was it. Keeps increasing more than forecasted. So, you know, people get worried. For the past 10 years, the markets have almost solely been correlated to the jobs. That's just how it is. If you look at a jobs chart compared to the market, you could practically trade jobs as the indicator. I could put jobs right down here as an indicator and be able to trade the markets from a longer term perspective, of course, because they're not going to report jobs every 60 minutes. No. But, you know, you can use it almost as a long-term indicator. And that would be something to think about. So, next, I think we should look at bonds. You know, actually, never mind. I've been long bonds, but I want to look at the Russell first. Yep. Okay, so I got short the Russell. I took a serious hit, some hits, but this was a very small options trade. So this is actually one of my losers, but I'm still okay with it. So I really got short the Russell in here, and I'm also short the Nasdaq, and we'll look at that in a minute. But this was definitely more of a fundamental trade, because I wanted to short. Most small cap companies are junk, so I thought, well, most of them are junk, so I decided to short small cap, risky, more volatile, and I want a more profitable trade. So, you know, get in, short the Russell. Moves a little differently than the ES, but that's because technically, if you look at something like Northwestern Mutual, and they'll say it's a different. They do all this diversification hocus pocus. I call it hocus pocus because it really doesn't work, but they consider small caps a different asset class than large caps. So, you know, that's okay. Most people want safety. I'm not one of those safety people, but, you know, I'm picky about drawdowns. And, you know, I've visited different funds where they're all about drawdown, and can't really mention what they are, but anyway, so I'm short the Nasdaq. This has been a very profitable trade. I got in a few days ago around here, or somewhere probably more likely like this level, something like that. And then, no, it must have been not that level. I forget exactly what level I had it at, but I shorted the Nasdaq somewhere, and it was happy, very happy trade. And actually that trade only made around, it didn't make very much money. And you know, that's okay. That's okay. But anyway, I got short the Nasdaq, and I was planning to be short the Nasdaq. Obviously it broke any sort of support, so I'm not worried about support until probably around between here, this range, you know, 27, you know, 2,200, or, you know, that. And this isn't very strong, so, you know, Nasdaq still looks pretty good. So then we'll look at the 10-year. I'm still long the 10-year. I plan to be long the 10-year for the next few days, maybe up to 2 weeks. And I've been long since here, and I've been happy about it. I was looking for a V correction. I sent something to my newsletter customers saying I thought it would be a good trade, so it turned out pretty well. And I'm still bullish on bonds for the next week. 2 weeks I would rather short bonds, just because of the way they are. Okay, gold doesn't seem to be working, but let's look at the 10-year. Oops. We'll give it a second. Huh. Okay, that's a little bit strange. You know, let's see if we can give it a minute. Ooh. Okay, well, I'm gonna have to cut this a little short. I hope you listen. I'll make a follow-up video a little later, but I hope you enjoyed this. Our futures are rising. They've been contracting. This means interest rates have been going up in here and are starting to go down. So that would